Yeah, I'm losing my edge.
Let's talk about scalping gold and silver. It's been probably one of the best opportunities of recent months. Maybe I don't like to make year-end lists this early, but this might be top three market for us in 2020 here, this precious metals market.
Agreed. You know what? And this has been, we went through a rather nuanced explanation previously about trying to decipher the differences between these precious metals and depending on what you want to do, how you want to, which one you want to choose, and how you want to implement that strategy. This has been truly a pure product play. It has been trading precious without any of the noise. You know, I've been able, with some good and some bad. This is something that I sold early and covered painfully, I think, last week, but it was something I actually came in long this morning, was able to manage and scalped a little bit on both sides. This market, even at these levels, and if you look at the components, gold and silver, they've got to an extent a similar view to it, but it really is a much more difficult view to kind of parse through. This is a very clean two-sided trade activity. If you're willing to accept the fact that, you know, 60 was cheap for a long time. So was, we spent a lot of time fretting over $14 silver and never feeling that it could be at $20 until it went to 30. I think, looking at this interesting range between a shade over 75 and 85 is a very tradable range. And the back and forth here, if the back and forth was just this collapse of these very small amount of individual price points, that becomes very difficult to trade. But the back and forth we're getting here is tradable. And that's what I really like. I feel much more comfortable, and it's interesting. You talk about moving your eyes from one product to another. And this is very, very much the case. Sometimes you want to, run home to mama, so to speak, and look at what you've been used to looking at. I find that this is such an easy way to get into the precious metals world. It doesn't feel like I need to put the security blanket and wrap the price of gold and silver over my shoulder just so I can see how this is doing. This really lives and breathes as its own thing and works really, really well.
Yeah, I've definitely been viewing gold futures and silver futures, or if you want to talk about ETF shares or options on either of those different products, as being two distinct trades. You know, you've got a gold market that's that made all-time highs the last 3 or 4 decades, all-time highs a couple weeks ago. You got a silver market that has climbed a fair amount, has had a more vicious rally than gold, but is only about halfway back to its all-time highs over the last few decades. And so with those two markets that have been trading with similar direction, but very different extremes and different price points historically, different contexts, I'm trading them very differently. But when you basket these two together, you have, for me, this SPRE, small precious metals futures, that are just giving you great back and forth. And that's all I'm taking it for. You talked about your opportunity this morning, Pete, where this market was once again higher by around $1 and then gave back ground and actually was red on the day in SPRE futures, and now has bounced back a little bit, showing great intraday back and forth. I wanted to use Monday as an example. First trading day of the week, these futures opened at 7 a.m. After last Friday's close at $78. They opened at 78.80, Pete, and then they climbed all the way to 79 and a quarter, so $1.25 higher yesterday morning around 10 a.m. And then they fell all the way back down to 78.80, and that's great intraday opportunity. And if I flipped this chart, Pete, and I said, they closed at 78 on last Friday, and then yesterday morning they moved all the way down to 76 and a half. I'm looking at this same opportunity from the long side, because we're seeing these big moves in the morning in this SPRE futures contract, and then a ton of wiggle around it. Now, if you sold up $1 here, it would have moved through you by 11 a.m. And that's why we don't necessarily, we'll get to where you set your levels at in a second, but all I'm looking for is, wow, the market opens up higher, it makes an extension on that, and then comes all the way back, and then also bounces off of those lows of around 12:30 in the afternoon yesterday to still be up a healthy chunk. And that's the kind of activity we're looking for And, you know, digging further into this, Pete, I want to see how you look at this, because we've been talking about the average daily move in SPRE futures being around $1. Okay, but that doesn't guarantee that buying every -1 and selling every +1 on a net change basis is a success, right? It's more just a starting point. Like when you saw SPRE futures either yesterday or today up around $1, and then they put in highs of, you know, up $1.25 or $1.30. What are you looking for when you see these markets opening higher and then extending on those highs?
You know what? I think it really speaks to the nature of the tradable range. So it's a good question, because I think what you're boiling down to is and you know, it's wonderful. You've got this ballpark of $1. $100 of daily movement is an interesting range for us on either side. And it's kind of worked out for most of the products to sit within that plus or minus 10%. So do I incorporate that 50 cents as part of my dollar, or do I take the dollar's daily range? You know, in other words, the $1.50 net, but the dollar tradable range during that day. I think that really comes back for me a little bit of the working from the amount. If I'm looking at this dollar as a scalping range, I'm taking it from the opening and looking at today's extension of range, not including that net change from the previous night to where we opened. It's not wrong. There is no wrong answer here. But I think that depending on the type of trade you're looking for, I don't consider those, say we open up 40, those are part of the 100. I would look at seeing where the market can go the balance of the day.
Yeah, I use this $1 level as more like I say here, a solid place to start. But yeah, to your point, you know, this market opens at 7 a.m. That means that during Europe and Asia, metals have been moving, and that's kind of built into this open. So the market, if it opens like it did on Monday, up around $1, I almost, like you, Pete, am looking for an extension on that. You know, that's telling me that during Asia and Europe, there was bullishness in this market. And maybe here on the US stock market open, we'll see some US participants put some more bullish activity into it.
Right.
And then I look for, it's not this matter of it's 7 a.m., gold and silver have been rallying all night, and so I'm just going to immediately sell this market up $1. But to your point, there's no wrong or right answer. What we can put some numbers to is just how much opportunity there has been here. 40% of the time here in 2020, we've seen daily moves outside of $1. And that's not, only about 20% of the time has it closed higher or lower by $1. So that's telling you that intraday, the highs and lows of this SPRE contract are outside of that dollar range. Half the time it comes all the way back within $1, but on average, at least there's about 50 to 60 cents worth of distance between where that market put in its high or low and where it came back to and closed at. And so, yes, you can look for, it's up $1.05. Maybe I'll look at selling it, or it's down $1.15. Maybe I'll look at buying it. That doesn't necessitate a winning strategy, but there's been a lot of opportunity outside of this dollar move, and there's a lot of room to get on the other side of these trades, like we're seeing here.
Absolutely.
And you know, maybe you didn't sell the highs here at 79.05 or 79.10, but there's enough wiggle. You're seeing almost a perfect personification of those numbers. There's about 50 to 60 cents between those highs and where the market ends up coming back to. So a lot of room.
Right. And you know what, that's just a perfect analogy, Frank, because nobody is selling the 79.18s and saying, oh, look, they rolled over and I'm never going to take a loss on them. You had time before that 79.22 print and time after to trade that range. I think the idea of the ability to have that range and start, I mean, we talk about strategies and mechanics. You've set out a strategy that's statistically sound. Now you've attached mechanics to it in terms of execution and management. You know, this is definitely as long as you can sit through it and feel comfortable within the, you know, and it's taken me a long time. I think if you talk to any trader, to be non-denominational. And what I mean is no loss tags you so bad that it leaves an emotional scar. Now, we all hate losing. Let's not kid ourselves. We learn through losing far better than we learn through winning, and none of us like it. But the ability to walk away and not feel so vested in one side of the market and not carry those trades with you to the next set of opportunities is so important. And that's where this type of movement and the ability to scale up that idea becomes so important.
Yeah, and you're getting at exactly where I want to conclude this is, we see opportunity outside of a dollar move here. We've seen it regularly over the last week or two, even though the market, as you can see here, hasn't really settled outside. These are the daily moves in SPRE on a dollar basis here. And you can see with the $1 bounds on this dotted line, not a lot of closes outside of a dollar, but a lot of intraday movements like we just showed you from yesterday, where this market yesterday closed up, 70, 80 cents, but it did get as high as almost, $1.50, $2 of movement, moved outside of that range before coming back. But to that point, 20% of the time, like I just spoke to, this market has closed outside of that dollar range. You see some of these outliers here in March, where the market closed, up $2, up $3, down $2, down $3, and this makes big down $7 move of about a month or two ago, and some big upside moves a month or two ago, and that's demands mechanics around this. Like I spoke to, you can't just sell every +1, buy every -1. I usually look for extensions past those points of interest, and then also, it's just a simple matter of having those entry points that you think are interesting around this gold and silver trade, and then attaching management levels so that, if you bought on this day here in mid-August, if you bought SPRE down $1.50 or down $2, and it continued to close all the way down 7, hopefully you had those mechanics to say, I'm only taking a $50 or 50 cent or a full dollar or $100 in notional. I'm only taking that amount in loss. It's just a matter of saying every time I buy or sell SPRE, Pete, I'm attaching these management levels of $50 in profits, $50 in loss, $100 in profits, $100 in loss. Right. And then you'll be good to go with the entry points and the management levels in scalping gold and silver.
Right. And you know what? These are great starting points. And this is a great walkthrough of very doable mechanics. Your mechanics are yours. If it's 2 to 1, 1 to 3, whatever you want to do and you find success with, and you need to find that comfort level that fits with your emotional trading strategy as well as your mechanical trading strategy. But these are, the process is not overwhelming, especially with products like this. You've eliminated the difficulty with product selection, giving you a simple expression of opinion. Now the mechanics become yours. And as long as you stay consistent and look for those statistically significant pieces of movement, you're in a very good position to keep repeating over the long run a successful strategy.
Yeah, absolutely. Because what you can't do, Pete, is just buy this. Maybe you bought the day before, you bought down $2 and it bounced back a little bit, and then you buy down $2 and then it closes down 7 without any mechanics here, and then you just wake up tomorrow and you still have that long position. That's what you can't do. Whatever your mechanics are, if you want to, risk 2 to make 1, risk $100 to make $50 every time because you have a higher probability of profit on your scalping trade, go for it. But you have to set those entry levels and those exit mechanics as well. They're very important. And that's all the time, Pete, that we have for today.